Hello Market Club members everywhere. Adam Hewson here coming to you from the digital studios of Market Club. Well, it's one more day and it's the end of the first quarter. It's been one heck of a quarter. I think we can all agree the markets have had a big move on the upside. And we're going to be looking at a stock that we haven't talked about recently for a long time actually, Yahoo, symbol YHOO. This used to be the darling of the stocks. Everybody loved this stock, It's going to go much higher. And of course, things just sort of, they got lost in the technology race. Came down, but yesterday we had a signal right here. You can see that on a monthly triangle at 36.39, market currently at 36.81. But the interesting thing is it actually moved above this pivot point. A couple of things I want to share with you today in this video, and that is, one, we had a divergence. We've talked about divergences before. Here's the low, and you can see how it goes up like that, and prices actually go down. So that was a divergence. The other thing is we had a pivot point here and here, double bottom, and this is the pivot point, and we've just gone over that level. So if we call this level on the upside 36 and on the downside 28, that gives us basically 8 points difference. So you take the 8 points right here, add this to 36, and that projects you up to 44, which takes you back up to this area of resistance. And I think the 42 to 44 level should be a target on the Yahoo right now. Maybe it's going to be acquired by Microsoft. Maybe someone else is going to buy it. Who knows? But the reality is this action yesterday was pretty conclusive, moving over these double tops, this pivot point, and that's measurable. We've seen this before. It usually works out, not guaranteed, but it's a very high probability. So let's see what happens to Yahoo in the future. The other stock we're looking at today is Apple. You can see the symbol AAPL. This is obviously even a very high flyer, but really just doesn't seem to have the same old pizzazz when Steve Jobs used to be around. Unfortunately, he passed away, as you well know, in 2011. But here's the resistance we see for Apple right now. And there's a lot of competition. Yesterday I went into a Best Buy store. First time I've been to an actual physical store for a long time. And I was amazed at all the products that were out there. All the wearable technology, the Android phones, tablets, and so forth. And to be honest with you, the edge that Apple used to have has gone. Technology is being really, it's a very tough race. People are all trying to vie for the same dollar. And the reality is the only thing that Apple has, in my opinion, is the fact that it has this ecosystem, which is incredibly powerful and keeps returning revenues to the company, which is a good thing. Recurring revenue is always a good thing. So let's put a trend line in here from the highs right here through here, and if we just say that's it, you can see basically that's what's stopping the market right now, in our opinion. It's probably going to see a pullback, maybe back down to 100, but generally speaking, it's going to be very hard for Apple just to go up from here, even though they're going to announce their new phone, the new small phone, which is really the same as the iPhone 5S, except it has a 6 operating system in it. That's the only difference. So anyway, that's it for Apple, but generally speaking, I'm not so enthusiastic on this stock at the moment. You can see we are differences right here. The monthly is down, the weekly right here is also up, indicating a trading range, and that gives us the 70 score right here. So let's see how that plays out. This is crude oil. You can see crude oil basically been moving sideways. We actually have a 75 score indicating a trading range, which is pretty much where we are right now. The weekly is still up, monthly down, daily down, trading range. Let's stand aside for that market. But the key level to watch, in our opinion, is the 37.71 level. And this is the low right here, 37.71. If we go below that level in the May contract right here, then I think we'll see further downside pressure, perhaps to the 35.50 area, which is right here. So let's see how that plays out. Looking at spot gold, gold had a good day yesterday. You can see the daily one kicked in, and you can see that really didn't change anything because we still have a weekly that's down. The monthly is still positive. So longer term, we're still positive on gold, but for the intermediate term, we are somewhat in a trading range of plus minus 55, indicating a trading range right here. So we're down today, but generally speaking, look for this market to be a little bit choppy in that trading range. We did move over the 50 line very quickly yesterday, but it's sort of back down there today. If we close lower, it'll probably fall back down. So it's trying to build something, but longer term, we are bullish on gold, and we think it's going to go much higher. We're looking at the Dow. You can see quite clearly the Dow is up today, all thanks to Janet Yellen and the friendly Fed that keeps printing money and making easy money available. I mean, why would people have the money in savings? They get nothing there. Take a shot at the stock market. That's what people have been doing. That's what really has caused this whole rally. Are they going to raise interest rates? Are they not going to raise interest rates? That's the dilemma. And of course, Janet Yellen caved yesterday and said that, the economy is not so good. So if the economy is not so good, why are stocks going up? It's going up because it's easy money, and that's the bottom line. Once that changes, then stocks, in our opinion, is going to go down. Key level to look at this month is $17,905 on the Dow. If it goes over that level, then it turns this red trade triangle positive. So watch that level very carefully. Next market we're looking at is the NASDAQ, and you can see quite clearly we had a big day yesterday. Again, Janet Yellen, thank you, but it's sort of pulling back a little bit here. I am still not convinced that we're going to go straight up here. We've got a lot of resistance above this market, and the key level to watch this month is on the NASDAQ is 5,177. That's the key level we want to watch. That'll turn this triangle green. However, we are in a trading range, and that's the important thing to remember right now. But if we just scope this out further, let's clear the screen, get a bigger picture of what's going on, you can see, and we'll take all these trade triangles off, too many, you can see that this market really has a big, sort of overwhelming distribution top right here, and I think that's going to hold the market. I don't think we're going to see new highs in this market this year. In fact, I think we'll see the market come down. Last market we're looking at is the S&P 500 right here. You can see that quite clearly, and you can see the market did move up today from yesterday's Janet Yellen move. Again, it's all on the Fed, nothing else, nothing else. Earnings haven't been particularly great, and the economy is slowing down. And why would stocks go up? Because they're going up. It's as simple as that. There's no other explanation. Generally speaking, we are still negative longer term. This market will turn if it moves over 2,105 this month. This month, we have one more day to the month, and we'll see how that happens. But generally speaking, I think we could pull back from these levels, and depending on how we close today, could be very, very interesting. Hey, we've gone through a lot of things today. Look at Apple, look at Yahoo, for example, on the upside. I'm Adam Hewison. Please leave a comment for us. We'd love to hear from you. I'll be back probably on Friday at this point in time. We have meetings tomorrow, so have a great trading day, and thank you for watching this video.